These are 8 top stocks in after hours with big percentage gains today. Our review on ICAD. ICAD Inc., which specializes in AI-powered cancer detection, just announced it's being acquired by RadNet in an all-stock deal worth about $103 million, or $3.61 per share. That's nearly a 100% premium over its last close, and the market reacted fast. Shares shot up 78% after hours, with a sharp 75% breakout right at the open of the after-hour session. ICAD's Profound Breast Health Suite helps detect cancer earlier using AI across mammograms, MRI, and CT scans. With this deal, it'll now be part of RadNet's Deep Health division, giving RadNet a bigger AI footprint and access to over 1,500 provider locations in 50-plus countries. It's a big strategic move that could accelerate RadNet's position in cancer screening, while ICAD investors get a strong premium. The deal's not final yet. It still needs shareholder approval. But for now, it's clear the market sees this as a big positive. Our review on OMEX. Odyssey Marine Exploration Incorporated, a company focused on discovering and developing seafloor mineral resources, just lit up the after-hour session, up a massive 69%, with the bulk of that move, about 55%, kicking off midway through after-hours trading. Now, Odyssey's no stranger to deep-sea ventures. Its portfolio spans everything from phosphate-rich sands off the coast of Baja California Sur to undersea gold prospects near Papua New Guinea. Their main play, the Don Diego Phosphorite Project, is a high-potential phosphate resource in Mexico's exclusive economic zone, critical for agriculture and potentially valuable given global fertilizer demand. There wasn't a clear press release tied to the spike, so this move could be driven by speculation, chatter, or investors betting on a regulatory or development catalyst. With a stock like this, deeply speculative and tied to big, long-horizon mining projects, moves like these can be more momentum-fueled than fundamentals-driven. Still, for companies sitting on rare undersea resources, any hint of progress or green light from regulators could be a game-changer. Definitely worth keeping an eye on. Our review on TGL. Treasurer Global Incorporated, a holding company behind the Citi app, a payment platform that blends online to offline e-commerce with instant rebates and AI-driven cashback, just had a wild after-hours run, shooting up 53% after a 65% breakout right at the open of the session. This is one of those smaller, under-the-radar names that can really move fast when momentum hits. Citi leans heavily into the cashback and rewards game, powered by AI to push out personalized deals based on user behavior. So it's not just another e-commerce app. It's trying to build stickiness and data-driven targeting in a crowded space. What's interesting is the size of this after-hours pop came with no clear headline. So this could be momentum traders piling in, or maybe even a leak ahead of news. When you see a 65% breakout right at the bell, that's usually not your average volume drift. It looks like someone's making a bet that something bigger is coming. Worth watching closely, especially if they're teeing up a partnership, product expansion, or some earnings surprise. But with these kind of spikes, just remember, volatility cuts both ways. Our review on BLMZ. BloomZ Inc., a unique player in the entertainment tech space, specializes in audio production, voice actor management, and VTuber operations, a fast-growing niche where real-time motion capture meets live streaming. They also run voice acting workshops, blending traditional talent development with cutting-edge digital content. Shares jumped 41% after hours, with a sharp 35% breakout right in the middle of the session. That kind of move, especially without a public press release, usually suggests something is stirring behind the scenes. Whether it's a new VTuber launch, a major licensing deal, or an unexpected content expansion, traders seem to be betting that something bigger is coming. BloomZ operates in a niche but increasingly relevant corner of media, where interactive digital personas and streaming content are gaining serious traction. With no official word just yet, it's a name to keep a close eye on. This could either cool off quickly or run even hotter if the news breaks soon. Our review on LRHC. La Rosa Holdings Corporation is a real estate holding company built around a tech-forward, agent-first model. With operations spanning brokerage services, both residential and commercial, franchising, coaching, and property management, they've carved out a multi-service real estate ecosystem across Florida, California, Texas, Georgia, and Puerto Rico. It's a business that's part traditional real estate, part modern SAS-style support for agents. Now, the stock popped 33% after hours, and the catalyst? NASDAQ granted La Rosa a 180-day extension to get back in compliance with a $1 minimum bid price rule. That might not sound like headline-grabbing news at first, but for investors who've been watching closely, this is a green light that buys them more time to execute a turnaround without the threat of a delisting hanging overhead. The extension keeps them trading on a NASDAQ capital market, which is critical for investor confidence, liquidity, and attracting potential partners or buyers. Management signaled they're willing to do what it takes, including a reverse stock split if necessary, to stay compliant. The after-hours move suggests traders are encouraged by the breathing room, betting La Rosa might actually pull this off. Still, it's a clock that's ticking, and what they do in the next few months will really set the tone. Our review on NB. NioCorp Developments Ltd. is an exploration and development company focused on critical minerals in North America, particularly its Elk Creek project in Nebraska. This project is one of the highest-grade niobium resources in North America, and it's also evaluating the potential to produce scandium, titanium, and several rare earth elements. Located near Elk Creek, Nebraska, it's a shovel-ready project that's starting to generate more attention due to the growing demand for critical minerals. Investors are clearly tuning in, with NioCorp's stock up 18% during the day and another 14% in after-hours trading. The big catalyst here is CEO Mark A. Smith's upcoming appearance on Fox Business, where he'll discuss China's recent export restrictions on rare earths. As global concerns rise about supply chain disruptions, NioCorp is strategically positioned to help mitigate these issues. With its ongoing work at Elk Creek, the company could play a critical role in domestic production of rare earths, which has investors increasingly bullish on its future. Today's movement in the stock price is just a glimpse of the potential upside as more attention turns to this critical sector. Our review on USAR. USA Rare Earth Incorporated is making waves as a major player in the critical mineral space, particularly through its efforts to develop a rare earth magnet manufacturing facility in Stillwater, Oklahoma. The company is aiming to build a domestic supply chain for rare earth elements, vital for industries like defense, electric vehicles, and robotics. By sourcing, processing, and producing these materials, USA Rare Earth is positioning itself as a key supplier. The stock has surged 15% today, with another 11% jump after hours, and it's easy to see why. Reports of the Trump administration drafting an executive order to stockpile critical metals from the Pacific Ocean are raising alarms about the U.S.'s reliance on China's rare earth supply chain. As China halts exports and tensions rise, USA Rare Earth's push for a domestic magnet supply chain looks even more crucial. CEO Joshua Ballard's message about securing U.S. rare earth and magnet supply resonates, and investors, especially retail ones, are taking notice. The stock's rise reflects growing excitement about the company's role in supporting critical technologies, particularly national defense. Our review on EPIX. ESSA Pharma Inc. has been on the radar for its work in developing therapies for prostate cancer, especially with its lead candidate, mesofanatin, which targets the androgen receptor. The company has been pushing forward with clinical trials, aiming to treat patients with advanced prostate cancer. However, recent news has taken a sharp turn. Soleus Capital Management, a significant shareholder, recently urged the company to wind down its operations and return the remaining cash to shareholders. This suggestion comes after ESSA's lead treatment failed to meet expectations, and the company paused its clinical studies. Soleus pointed out that with ESSA's share price languishing around $1.60, far below its cash value of $2.40 per share, shareholders might benefit more from liquidating assets rather than continuing down an uncertain path. In response, ESSA's stock has seen a 7% uptick after hours, likely driven by investors reacting to the notion that the company could return value to shareholders. It's a tough position for ESSA, as it balances scientific ambition with financial reality. The market seems to be acknowledging that winding down might be the best option given the current circumstances. Please subscribe, give the video a like, and watch more from our playlist. Thanks.